What's good, my people? How you be? GizzyCredit here. Thank you so much for those logging on right now. Let me go and get John on the phone right now. As you could see, this is our thumbnail for today, and this is what we will be talking about: how to handle how to respond to a collection letter that you get in the mail. So, aside from that, let's just get John on the phone and get ready for this podcast. For those. Okay. What's good?
Hey, what's up?
What's going on, John? Over here, just finished donating some blood. Running around, getting ready for the day. Got the thumbnail ready to go. So want to make sure that everyone can hear you. Say what's up, John. Hello. Let me know if you guys hear John. Okay, mi gente, so your boy GizzyCredit here. That's John Brucker, the brains of it all. We do these podcasts every Monday. We missed last Monday, but we're back. So I want to say thank you so much for logging on. One of the best ways you guys can support the channel is just by liking, sharing, and subscribing to the video, hitting the notification bell so you never miss the content or you never miss these lives. A lot of you are our credit repair customers or are into finance. You want to know more about it. You want to know about how it works. We've been doing these podcasts for 8 months already. Today's August 3rd. So 8 months already doing podcasts. Well, almost 8 months, but still, this is all for you to get knowledge. And today's podcast is going to be how to respond to a collection letter when you get in the mail. Now, you're going to have people in the credit repair business who are going to tell you, don't pay this collection or pay off that collection, what to do first. There's a lot of credit blogs out there. This pertains to when you first get the collection letter, okay, and it's not yet reporting on your credit report. So John's going to talk to us more about how that process is for your educational purposes. What's going on, John? Hey, John, how you doing? How's the Rona over there in Florida?
I have no idea. Everything's the same here as it's been the whole time. So I mean, evidently, it seems as though things are. Last I looked, I try not to get too inundated with it, just for obvious reasons. But I mean, I think the case counts leveled off. But unfortunately, I think the fatality rate is going up, so I don't know how that plays out. I'm starting to see, I sent you that stuff the other day about some of the case counts in other areas in the Northeast are starting to pick up, which isn't surprising. We talked about that in the past, right, about how it's inevitable that's eventually going to take shape, and you're seeing stuff like this with sports and stuff. That's not going to last. So I mean, it is what it is. It's funny just because of the fact that it's just everywhere. I did research on the Spanish flu in 1918, right? Which is the last time that we had one of these like crazy, something to this extent, right? We've had like scares like SARS and stuff, but
yes,
something to this extent was the Spanish flu of 1918, and it's crazy because we're doing almost the exact same things 100 years later. Like the masks and the responses are almost identical.
Yes.
It's insane though, because we're so much more technologically advanced as a society. Yet we're doing the exact same things we did 100 years ago when there was barely telephones. Right?
Yes.
It's crazy, and it's a little disturbing to think. But if you go back and look at that, and if you're using that as some sort of a barometer, right, that lasted like 2 or 3 years.
Oh, wow.
Right? That was a situation that lasted 2 or 3 years. It didn't last 6, 7, 8, 9 months. It lasted 2 or 3 years. And if you go back, the CDC even has like a full breakdown on the timeline of it. It kept reappearing. It kept coming back. And, there ultimately was never a vaccine for it. It turned into the seasonal flu, which we experience now.
Yes.
So I mean, you're dealing in a situation where I don't think it would surprise anybody if this becomes something similar to that, just because the response seems so identical. We're blindsided by it. It continues to change its form, shape, the way it attacks you, the people it attacks, etc. That we may not ever be able to get out entirely in front of it. But as far as the economy is concerned, I think it needs to be fully priced in. We're not even close to pricing it in. But for the sake of the topic, yeah, I mean, I think the whole idea behind what we wanted to talk about, we try to talk about topics that we think will help people, whether they're a client of ours or not, right? We covered a lot of broad ranges, right? We've covered mortgages, we've covered what happens if you get a lawsuit against you. We've covered economic stuff. We've covered buying a house. We've covered real estate investing.
Yes.
We've covered, AUs, etc. And one of the main things that we get, one of the more common questions is relating to what do you do when you get a collection letter, right?
Yes.
And, like you were saying earlier, I mean, I can walk it all the way down, but initially the idea behind this is when you get first notified that you get a collection, right? So what happens is, by law, if a collection company buys your debt, they have to send you a notification that they now own that debt. They're now the owner of that debt. You have to pay them. Very similar to if anybody has a mortgage that's listening to this and their mortgage gets sold to a different company or a new servicer, they notify you of that. Or if your auto loan gets sold, or whatever the case may be, they have to notify you of that. And in that letter, it's a notification of debt letter, and and it says, you have 30 days to dispute the validity of this debt. Well, in most cases, if you're talking about debts that were charged off, which is a large majority, whether it be credit card charge-offs, auto deficiencies, et cetera, what ends up happening is they get bought with a tranche, meaning let's say Capital One has 50,000 other charge-offs that they package together and they sell to a big collection company like a Midland or Portfolio Recovery or Enhanced Recovery, etc.
Correct.
And they sell them as a tranche. So what happens is, they make the payment, and in lieu of the payment, they get a file with all the client's names, all the information, etc. Yes. But what comes along with that ultimately is the substance of it, which is, all of the agreements that were signed by the client, whether they were done online or nowadays it's all done electronically. Yep. But that's the agreement, that's the effective, it's the mortgage of the debt, right? It's the actual instrument that holds the value. Okay. So when they sell that debt to Portfolio or Midland, what comes over immediately with payment is just the details on the debt, right? So now they made payment, this is what you get. You get all the information on the borrowers, what they owe, so on and so forth. So they immediately pipe that in. They start collecting. They made a payment. They want to start getting a return. In a lot of cases, they start collecting way before they have the substance, which in our country, you're not allowed to technically and theoretically collect until you actually have the instrument, meaning in the case of a mortgage, that would be the actual mortgage. In the case of an unsecured charge-off debt, until you have the actual agreement in your possession. So what we tell clients or people that aren't clients, that, like in this case, if you get sent a collection for charged-off debt or something of that variety, send them a validation. And listen, there's a lot of validations floating around the internet. Validations I'm referring to. That are floating around. A lot of them aren't worth the paper they're written on. Some are good. If somebody needs one, reach out to us. We can give you a generic one that'll be effective and serve its purpose. But the purpose of it is effectively to hold them to what the law requires, right? It effectively details all the things that they're required to have in order to reach out to you. One of them is possession of the debt itself, right?
Yes.
So when you send the validation, if you send it quickly, and if it's a new debt that was charged off and they get that, they immediately send out, like they all do. And this isn't specific to particular collection companies. This is how they all operate. So when you turn around within that first notification and send that out to dispute it, in a very large majority of the situations, if you get it out early, they're not going to have it. So they're not going to be able to produce the information you're requesting. And in a lot of cases, if it's the more reputable ones, the larger ones, they know they're not going to be able to collect on that at that point because they violated it, right? They've reached out. I mean, in a lot of cases, they're subject to disciplinary action because they're not technically allowed to reach out during that anyway. So then what ends up happening is they either send it back to the original creditor or they shelve it, because they know they're not going to be able to collect on it at that point. And in a lot of cases, when a tranche of debt is bought, they try to hit like 40% collection on that. They don't try to aim for 100%. So there's a lot of debts that get lost. There's a lot of debts that get, because think about it, you're buying them 2-3 cents on the dollar. So if you're batting 400, you're hitting 40% on 50,000. You're making money hand over fist 10 times over, right?
Yes.
When you're buying it for 1 or 2 cents a dollar, even if you're only collecting 40% of that 50,000, but you're collecting 20,000. And let's say you're collecting an average balance of 60%. Think how much money you're making. You're making an insane amount of money. So they don't need to hit 100%. So in a lot of cases, without getting off on a deviation, in a lot of cases, in those instances, if they can't produce it, what will ultimately end up happening is that that'll go back to the original credit, or it'll get shelved. Both of which won't lead to it reporting on your credit, or in a lot of cases, it proceeding any further as far as them trying to collect, because they know a large majority of collecting an average balance of 60% is the leverage they have in reporting against your credit. When they can't do that, then ultimately, obviously they lose a lot of motivation to try and collect the debt.
Okay.
And what's interesting is that it's both. The good thing about it is you're catching it before it reports on the credit. So again, when a collection company gets the actual debt, they can't turn around and immediately report on the credit report. They have to send this validation and debt notice first. They have to confirm with you know who to pay. And most people that have paid a collection, they pay in that window of time. That doesn't even go on your credit report. So if you get a notice that you have a collection and you get it in that period, and you're like, you know what, I'm not even going to question it. Let's say that you owe somebody $80 or something,
Correct.
and you get it early on like that, and you pay that $80. That won't ever make it to your credit report. That'll just they're not going to file it. They just don't. It's after that period where if you don't dispute it and doesn't get removed, or if you don't pay it, is when it starts to report to your credit, and then it starts to impact you negatively. This is a way for somebody to get out in front, knowing how the machine works, and try and get out in front and kind of play their game and force them to kind of show their hand early on. And in a lot of cases, this can work out really, really, really well for people, especially if they got stuff they're getting ready to charge off, or they know is going to charge off, because they'll know to send it out quickly. And they'll know exactly what the process is as far as getting out in front of and sending the stuff over.
Is there a specific time that you will think these collection companies, they'll think that they'll collect more? Is there a specific time during the year that they'll reach out back to people?
Are you asking seasonally?
Yeah.
I mean, I'm not aware of there being some kind of a seasonal adjustment, but I can tell you, just in any business, non-corona environment, right?
Yes.
Just in a typical economic month, like calendar year 2019, right?
Yes.
Obviously, the first quarter of the year is typically fairly slow because people are coming out of Christmas, right? And the heavy retail environment, when people spend hand over fist, is typically the last quarter, right? So everything in between, and then obviously there's a lot of spending on certain industries in the summer and stuff. When it comes to collection companies, I wouldn't see where that would be, because it would be so difficult to pick and choose, right? The concentration of trying to collect, because it's hard enough for them to collect in the first place, right? They gotta basically succumb to making threats and calling neighbors and friends to try and embarrass people. I mean, think the extents they go to try to collect in a lot of cases, which are all illegal anyway, but to try and collect in the first place. I can't imagine them saying, all right, it's April. Up north, the sun's coming out. People will start wanting to pay their debts. I think maybe in the back of their mind they might be thinking that. I can't imagine that they stop, because I know that in a lot of cases, a lot of these collection companies, the reps are on auto dialers. You know what I mean?
It's a machine. Correct. It's a machine.
Yeah, so they're not picking and choosing who they're calling. It's effectively their success rate in collecting on whoever they're calling that day. They sit down, they put a headset on, and boom, you're in the system, right? The file comes up as you're on the phone with them, and that's how it percolates. So you're not picking and choosing who you want to collect from, or the extent, until after the engagement is made. So if you're calling somebody and let's say you get Jim Jones on the phone, and he's like, yeah, I'll make an agreement with you, well, then that's your client, right? But if not, the guy's telling you to go F off, and you get 95 F-offs in a day, which I'm sure is a light amount for most of these guys. It moves on to the next one. They recycle, and somebody else gets that call later, right? So, no, I don't think that's probably... I wouldn't see the logic, because you'd be compromising an opportunity when somebody's flush with cash, right? Coincidentally, that they could have to pay, and they'd be willing to pay if you wanted to corner them like that.
So, knowing how this works, you think that when they make that call, when they get the letter and they make that call, that'll be a good time to negotiate the debt?
Well, who? What do you mean? Make what call? Who's calling you?
Well,
because what's gonna happen is when they get that collection company, okay, they're gonna immediately send that letter out to notify you that they can't call you yet. right? So they can't, when they send that letter out, they have to wait till that 30 days expires. They can't contact you yet, especially if you dispute it. If you dispute it, then they have to wait until that dispute gets done. Whether you're sending them a validation or however that dispute is working itself out, they have to wait until they get that back, and then they can reach out to you. And then they typically reach out to you, especially after which time, if they give you that kind of grace period to dispute it or to pay it during that period where you potentially can dispute it. After that is when they'll start calling you to shake you down, because they're like, all right, this guy's not paying, right?
Okay.
And this guy's not trying to dispute the validity, so we can kind of go out in full force. But I don't know if that answered your question.
No. I mean, we're gonna start getting more questions here, and you guys, if you guys have any questions about this, which I know a lot of you do, just write the question. Tell a friend that this, podcast is going on, and if they want to get an answer, tell them to ask the questions, and you post it here. We're gonna get back to you guys. But the collection, let's say it's a hospital bill. They notify you, right? So they notify you by mail. So you call that number that they say, call us if this is yours, correct?
They say call us if this is yours?
Yeah.
What do you mean?
Well, when you get the notice that, this is a collection letter, respond back by August 29th. After August 29th, it's gonna report onto your credit report.
Right, okay.
So
go ahead.
So I call August 25th. I say, hey, this collection, what do you say? Do you say this collection was mine, I want to settle it? Or do you say, give me proof of this?
No. I would, no matter what, right? In any, whether it's yours or not, you should always hold them honest, right?
Yes.
I mean, this isn't even disputing the fact you owe the debt. This is just making sure that whoever's collecting the debt is doing it legally, right? Like, that's all. I mean, this has nothing to do with validation of, like, the actual you taking the account out. There's laws that govern their ability to even reach out to you. It's good for any bank, any lender, right? And this is effectively holding them accountable in that regard. So you wouldn't call them, you would send the validation, right?
Because people always say, who are you? Like, what's this company? What is this for?
Well, I mean, there would be no reason to call them up and do that if it's illegitimate. And you call them, and it's literally something somebody's unaware of, and you call them and tell them, look, this is fraud. They'll tell you what you have to do in order to substantiate it, right? But if it's something that somebody's aware of and they play stupid, do you know how many times that they get those calls on a regular basis?
Yes.
Right? I mean, it's probably endless, the amount of, I don't know what this is called. And on the other
end, in the morning,
like, okay,
the afternoon, at nighttime, right before 9 o'clock.
Say that again?
In the morning, in the afternoon, and right before 9 o'clock at nighttime.
What, you mean as far as...
They call, like the auto dialer is always on.
Oh, they're allowed to call up till 9, yeah. I think it's up to 9 o'clock at night every day of the week, and I believe, and I think they can start at 8:30 in the morning. Mm-hmm. But they're not allowed to call your relatives. They're not allowed to legally call your employer. If you tell them that you want everything in writing, which typically your validations state, if you have a validation that you're going to send out to them when you receive the debt or the notice of the collection, whether or not they remove it or not, or whether or not they admonish it or shelve it, like I've been describing earlier, you should put in there, whether it has it or not, that you don't want them to contact you anymore through writing. I'm sorry, through phone. You want everything from them in correspondence through writing. They have to abide by that. That's not an optional scenario. That's your legal right. If they choose to ignore it, that's a violation. Every phone call is a violation. If they call your friends, your family members, your employer, that's a violation. I mean, all these things are violations of the law, which constitute you being able to get money from them.
Oh, wow.
Yeah, so it's important. I mean, I don't want to go down the whole legal side of it, but it's also important to hold these companies accountable, because they're constantly, the reason that the industry is so heavily scrutinized, right, is because they're constantly breaking laws, right? I mean, you're not allowed to call people up and threaten them, right? They make so much shit up all the time as far as when they call people. They make up the reporting side of it. They make up everything, right? There's no educational requirement. No disrespect to anybody that collects collection companies, right? I'm not trying to disrespect. I'm just saying, much like with in the auto industry, when you have people handling large types of financing scenarios, you'd assume there'd be some kind of a regulatory or licensing requirement, right?
Correct.
But the people that are on the phone and effectively soliciting you for this money, there's no regulatory requirement. That guy could be a day out of jail, right? He could have been running a Ponzi scheme before he came there. There's no regulatory requirement in order to be able to call up and collect on debts. The owner of the company needs it, but not the guy collecting it. So, I mean, these are things people need to take into consideration. And although everybody gets stuck on the idea of, you know, the actual legitimacy of the debt itself, like that you took it out, and people try to argue, that's the dumbest thing ever. Because 99% of the time, people did take the debts out, right?
Correct.
And they did charge them off. They did run them up. They did run into a position where they over-levered themselves. You're human, right? We're flawed.
Correct.
That's what happens. People make mistakes, and you fix it.
Correct.
But a lot of these companies, not to trash anybody, but a lot of these companies and these boards and stuff, they constantly have people going and questioning the validity of the ownership of the account. There's 900 other ways to get an account off. There's 900 other ways to dispute all these other angles that exist within these accounts and how they have to report and how they're able to collect. Why are you going to go with the most obvious one, right? The most easiest one to rule out or to rule in this instance, right? So I think in a lot of cases it's just something that, you know, people need to be aware of what their options are. And I think in a lot of cases, I'm not going to say 100% of the time, because I'll give you an example. But a large majority of the time, if you get that validation out, but without even having to dispute it any further than that, because, you know, especially with the big guys like Portfolio and Midland, like I was saying earlier,
correct,
Enhanced Recovery, etc. You know, they understand that, you know, they're held to a different regard, and they're huge, right? They're huge. I mean, Portfolio Recovery is a publicly traded company. Pretty certain Midland is as well. So there's a lot of regulatory requirements that they follow, and they have to follow, right, as far as what they do. And they're not going to dick around about one collection, and if somebody catches them in a game, they're not going to continue to proceed and try and play stupid. But what I can tell you is I have a client of mine who's an attorney in Florida, and he has two medical collections we were getting off, and when we sent the dispute in, just a general dispute. Every time you send a dispute in, and a creditor, when you submit a dispute to the bureaus, the creditor gets notified. The creditor by law has to respond to that dispute, both to you and to they have to acknowledge it to you and respond to you and send you a copy of it. In a lot of cases, it's done to rule out fraud, but in essence, it's really done for them to just validate whatever position they have. Okay. But in doing so, the idea is that they typically send you a validation, whatever validation they feel as though they have. Now, this is separate from the topic we're talking about. I'm just giving you an example. Okay. When we sent the dispute out, one of these medical collection companies literally sent my client a letter on their letterhead. Said, you know, below is there was a request for specifics pertaining to this debt. And that request was requested by the bureaus, by the way, not directly from us, because we with the bureaus. But in this case, they had said, you know, our response to this particular dispute is listed below. This is the information we have on file from our client, because they were servicing for the hospital. Literally, all they provided was one line item written in with an account number, the amount owed, and the date service. That was it. They provided nothing else.
Oh wow!
And I said, and this guy's an attorney, and I'm like, can you believe that, right? And we weren't even sending the validation to them. So what they sent was of no concern. It was just comical in that was what they just. This is how bad it gets, though, right?
Correct.
That was a justification. It looks like somebody typed it in at the bottom. You know what I mean?
Correct.
Now, when you go into a hospital, and anybody's ever been to a hospital, I mean, my wife just got done going to a hospital. You sign all kinds of paperwork, right? There's all kinds of signatures. There's all kinds of stuff. I mean, you got to sign a paper when you walk in the door. You take your pictures now. I mean, it's literally it's like walking in the Federal Reserve. So to think that they couldn't even produce one signed document as it correlates to the debt is astonishing, right? And they felt comfortable in sending back their own personal version of a validation, which was 3/4 of small print, which detailed the fact that there was going to be a validation in that enclosure in that packet that we received. But instead, it was one line item with an account number.
Okay.
The amount and the data service. That's it. Nothing else included. Which is insane, right? So it just lends to my point that giving them the benefit of the doubt is not ever a good thing, right? Assuming that they have their ducks in a row is not ever a good thing. Assuming that it's an organized operation when they're collecting and they're buying tranches of 50 to 75,000 debts at a time and thinking it's all this very organized, protocol that's followed. It's not. It's much more like what I was explaining, where it pipes right into their callers and they keep it moving, right, into their auto dialers, and they just keep it moving. And in a lot of cases, if you get it early and you ask for that information, they're going to have a very difficult time finding it. And if they don't have it, they can't keep contacting you. And in a lot of cases, they're not going to want to service the debt anymore because you could turn around and go after them legally, or you could call them out on it and send something to the Attorney General relating to it, because it is a violation. And those complaints to the Attorney General go, it's like anything, anybody that's licensed, right? When you constantly get complaints against that license, it becomes problematic. And that's
they want to go and contact the Attorney General. Also, we've heard the Consumer
Financial Protection Bureau.
Financial Protection.
That's not gonna get them penalized.
Correct.
That's more of a bridge of communication, right? That's more like, listen, we're a government body. This person's complaining that you're doing this, and this, and it kind of forces their hand to communicate. But
okay.
And in some cases, it'll get them to take note. And in a very minute case, it used to be, you used to see it a little more. But in a very minute case, you may be able to see some changes made. But on a real, aggressive scale, because the Consumer Financial Protection Bureau doesn't bring legal action. Last I checked, Attorney General can. Right? It's a completely different conversation. It's just you got to get the Attorney General's attention. And the reality is, if it's a licensed entity, right, like a debt collector, like whatever else, I mean, I'm not telling you.
Hold on.
That, as far as protections, you should always be in the know about what your options are, because I think that the assumption, matter of fact, I don't think I know. The assumption by these collection companies, a lot of these creditors, is that the natural consumer is a fucking moron, right?
Correct.
And that they're not going to show up for court, and that we're going to garnish their wages, and that we're gonna call them and say all kinds of crazy shit, and they're going to bend over, right?
Yes.
And in a lot of cases, unfortunately, that's exactly what happens, right? People run and hide, or they decide because they just don't know. They don't understand, and they're not knowledgeable on the subject matter. They're knowledgeable on what they do for a living, and it's understandable. And then they go to a credit board, or they look it up on the internet, and it scares them even more shitless, right?
Yes.
So they end up just saying, you know what, man, I'm just turning this off.
Yes.
Rather than taking a tactical approach to the situation, which in a lot of cases could really put the situation to bed, right? And show them that you're not some clown. And that means a lot, because you got to understand something. The big collection companies, portfolio, again I reference, Midland, Enhanced, they buy a large majority of the debts in this country. I mean, it's not some small percentage.
Okay.
I mean, there are smaller ones, but they are the big purchasers. So, for instance, if they buy one charge off and you're somebody that you'll start to see the same collection companies appear. If you're somebody whom has worked with them before or has been amenable with them, working out terms, been easy to deal with, you'll start to see more of your debts get purchased. Don't think it's a coincidence, because it's not. And most people that listen to this will probably be able to relate. It's not a coincidence. So just understand that it's always good to understand what your options are at any particular point in time. And in this particular situation that we're describing, when you first get those collection letters, it's a good situation to get out in front of it. And that's the quickest and the most aggressive way to get out in front of it, knowing that you got a pretty good probability that early on in the process to potentially get that thing put to bed. Now, obviously, as the process goes on, and after you've had that window period of time, and they've had more time, that meaning the collection company, to get all that substance over from the original creditor. Again, if you remember what I said earlier, they first just get the I'm going to call it a zip drive, but it's not a zip drive. But when they make the purchase of the debt, they get all the information on the customers over for each one of the debts, right? So they can immediately start piping that in. They don't get the actual debts itself, to my understanding. So the debts come later because there's so much paperwork, right? About 50,000 or 75,000 debts. It's a lot of paperwork, right? So that comes over later, and that's sitting in some kind of a dungeon at the creditor that you're buying it from, right? So that doesn't just get produced. That takes a couple months to come over. So if you wait and you don't do this early, and you don't strike while the iron's hot, where you have the opportunity, then that validation isn't going to be as effective, right? It's just not. It's effective in this particular. Validations are effective in their own particular capacity, but in this particular instance, it's most effective for the reasons I've explained.
Well, we got a couple of messages here, and of course we're going to be getting more. And every situation seems to be different, but it's good to know how things work. Like I got OJ Rushton asking, what if you don't ever get a letter from the company and the debt ends up on your credit before you know anything at all?
Yeah, so here's the thing, and they play stupid some of these situations. So if there's a situation where they're reaching out to you without doing it, they're calling you or whatever, and you've received nothing, that's the first question you ask them, right? Well, I didn't receive the fact, because in theory, that's your protection, right? So let's just say, let me give you an example. It doesn't matter if it's one of the big collection companies either. Let's just say, for argument's sake, you had a medical collection, right? Or no. Let's just say you had a Capital One card that you charged off and they sold it. And let's just say XYZ collection company reaches out. You owe us money. You owe us the money. We bought the debt, so on and so forth. And you're like, okay, that sounds great. Well, can I start making payments? Yeah, sure. You can pay us 80% now, and we'll spread the rest out. So you start paying them. A month later, the real collection company calls you and says, "Listen, we bought this debt, and they send you something in the mail notifying you that they should have. You made a payment to somebody who represented themselves that way, which, by the way, happens a lot. There are a lot of scams, and unfortunately, debts that are a little older, there is no clearinghouse for charged-off debts. Yeah. Meaning, there's nowhere that it has to pass through to make sure it hasn't been resold fraudulently repeatedly, right? There's no way to make sure that happens without getting that debt validation letter, or not that validation letter, the letter of notification of debt, which is what I'm describing, where they tell you they now own it. They do that for a reason, because this way it protects the consumer, so the consumer doesn't go around paying 15 different people. If you didn't, and getting scammed, by the way, which happens to a lot of older people, which is why it was originally started, because old people were getting calls, you owe us this, you owe us that, and they're shitting themselves, right? Correct. And they're calling up. I don't know. They had no clue about anything, and they're paying stuff that they don't even owe. So in response to the question, if you are getting contacted, if it does go on your credit report, then you reach out and you find out where it went. Sometimes they'll claim it went to a different address, right? They'll say they sent it out to the address that they had on file. The problem is, my understanding is that doesn't really pass the sniff test, right? So, you ask them to send you the validation, the verification of debt notice at that time, right? Like, yes. I got into a problem with somebody 2 weeks ago for a client. They reached out to him. I have a power of attorney on this entire file, right, on all this stuff. So
nice.
They reached out to him.
Because you do the negotiating for the people, right, Jay?
Correct, yeah. But it goes beyond that. But yes, correct. I handle all that stuff for them. So in this case, the client, he had an account with Senate. It was like somebody in D.C. and they had an account with Senate Federal Credit Union, or it might have been Penn Fed, one or the other.
Okay.
And they ran into an issue, and the account got sold, got charged off, and it got sold. Well, out of nowhere, he gets a call from this random, and I'm not going to say their name. They're not a big collection company.
Okay.
And they had reached out to him like, look, this is so and so. We're looking for our money. And him, and he says, look, first of all, you should be calling me. Call him, meaning me. And he said, I'll send you over the power of attorney. You contact him. So he gives me a heads up. Look, she's gonna call. This is it. All right. She gets me on the phone and says, I'm with so and so. I'm collecting. That debt was sold to LVNB funding, and I'm collecting on behalf of LVNB. I go, you gotta be fucking kidding me.
Yeah.
I said, you think that? I said, do I sound stupid? I said, you think, first of all, he hasn't even received the notification of debt from LVNB yet, right?
Yeah.
That's been sold. That it's even been sold. But you're telling me that you're collecting on behalf of LVNB and that you are a secondary placement over and above that. Where are your assignment of debt? Where is anything? And, she's getting the woman I'm speaking to is starting to lose her mind because she doesn't know the answers to the question, right? Or she's just getting very flustered. Okay. And I said, look, here's the thing. In order for you to be able to reach out to my client, you need to send a notification of debt. Did you send that? And she goes, well, we're going to be sending it soon. I said, then you can't even call. You can't call, you can't write. You need to be able to get that. You need to give that window in order to do it. But you're even worse because you're claiming you're collecting off on behalf of another collection company. I said, look, we're not going to talk anymore until you send me over that information. I gave her a list of things I asked for. Send me over a copy of the servicing rights and send me over a notice of a transfer, right? Meaning, if it was PenFed, which is escaping right now, might have been PenFed. If it was sold to LVMV, show me that, and then show me how LVMV is authorizing you to be able to collect on their behalf. Because the way I'm looking at it, if LVMV has it, then we should be making the payment to LVMV, right?
Correct.
That's the logical. Why am I paying you? And what are you doing with the money? So 3 days go by, right? She was supposed to send it right back. 3 days go by. She sends me over the assignment from PenFed to LVMV. Nothing else. We haven't heard anything since. So that's shady, right?
Yes.
Where would that money have gone? If she doesn't have the ability to collect that, what's she doing?
Money's gone.
What? Money's gone. And you can't correlate it. So she sent over, the woman felt the need to send over the fact that LVMV had the right to collect it, which is great, which I had no problem with because it sounds like it makes sense. The story got real shady to me when she said she was collecting on behalf of another collection company. LVMV probably employs 15,000 people. What do they need to hire a different collection company to collect on their behalf for, right?
Correct.
And potentially compromise commission. So it's stuff like this. Right? Now, I understand somebody that's not versed in and doesn't understand the procedural stuff. We're trying to give some background on the procedural stuff right now, right? But the fact of the matter is somebody that does know better maybe would just acquiesce, but the reality is if you get enough understanding, you can literally, it's not, it's very binary in its process if you understand the process and they understand you understand the process, right? So in that particular case, going back to the original question, I would honestly reach out to the collection company and give them the business as far as where was the notification of debt sent, when was it sent, and document all this, because they're going to know they're dealing with a completely different human being that understands it a lot better than 85% of the other people they call on a regular basis, right?
Yes.
And in doing so, it pushes them away from interest in collecting on that because in a lot of cases these debts have flaws. It's just the reality of it. If you're Capital One and you generate 15 million new accounts on a regular basis, right, there's going to be flaws in the debts. There's going to be flaws in the transfers of the debts. There's going to be flaws in the collection of the debts. There's going to be flaws in all of these things. They're all there. So if somebody's buying 50,000 of them at any point in time, more than likely you're going to be able to identify a flaw. And if the collection company screws up, which happens a lot, find that flaw too. All works to your greater goal, the greater goal of the situation, which is getting out from underneath the debt or not having it impact you negatively.
You heard that, OJ? Now we have D Banks, inquiry removal and late payment removal. Yes, D Banks, we do that. If you're looking for a quote, just right here, my email. Just email me, hey, I want a quote for inquiry removal and late payment, and we'll send you where to go so you could get a quote for the service. And then we have D, and D says, I get like a call every hour, sometimes multiple times in 1 hour. I definitely need a validation letter to send to them.
Okay. Well, email us and we'll send you one over. And just make sure, the letter that we send over that you can submit will say that you want all correspondence in writing. Just make sure that, and that you don't want them calling you anymore, right? Just make sure that if you send it certified. You make a copy of what you sent. So if they keep calling you after you sent that to them, if you confirm that they've received it, if they keep calling you, there's an actual monetary amount that's tied to each one of those calls because it's in violation, right? So just be aware of that and just make note of that because, again, it's all for your own protection.
Correct.
It's all to let them know you know what you're doing as far as at least not getting bullied around. I mean, the whole purpose of us trying to do a lot of these podcasts and just tackle topics that are that are kind of broad, and there's just so much information on the internet. Most of it's wrong, right? And try and give the direct path and the right path, so this way you can get a little more leverage, because just a little more leverage in a situation like this goes a long way. A lot more leverage goes even further, right? And the leverage that you can obtain is strictly through knowledge. It's not physical leverage you're getting. It's through you understanding how the process works, meaning how the sauce is made, how it gets charged off, and that's kind of the things we're talking about now. And we like to go in the same depth about all the other topics we talk about, so that you can get a firm understanding how it works. So when you do get called by XYZ collection company that's claiming they're collecting on behalf of one of the big guys like LVMV, it won't sound like it makes sense to you, right? Like, it doesn't make sense to me. It'll sound moronic, especially when you don't get the letter in the first place, and all of it comes together and it looks like it smells bad. Something smells bad, it typically is bad. And you'll be able to pick up on that kind of stuff.
Yeah, OJ just said LVNV and Resurgent play those games, and they're the same company. That true?
LVMV and Resurgent are the exact same company, but they don't. I mean, when they submit stuff now, it gets submitted together, so they're not sending you two separate notifications, right? It won't be a situation where you get a notification from LVMV and then they call you later in the day and say, "Hey, it's Resurgent." Right? No, it's LVMV Resurgent is the same company. They merged. I would say 2 years ago, to make a bigger company. So, which is where it's at right now. So. You should be. I mean, look, traditional collection tactics are what they are, but I can assure you that there's no collection company that's saying, you know what, let me hire a smaller collection company when we employ 15,000 customer service reps to collect on our behalf. That's moronic. It makes no sense, because then you're gonna have to pay that other collection company commission on that money when you already have guys collecting on that. It's illogical. If something's illogical and doesn't make sense, it's not true, right? So,
correct.
In that particular case, it wouldn't make sense, but you should always just, hold them accountable. Makes no sense otherwise.
Correct. Okay. So we have famous Miss Divine Brown. Hello, Miss Divine.
Hi, Miss Divine.
Hello, Miss Divine. Portfolio. Well, let's bring her in. Portfolio contacted my friend, giving her 3 options on how to settle a $700 debt. I told her to ask the man who fixed her credit if he disputed them, because they can't collect if they were taken off. That's
not true.
Okay, that's not true. Okay. They would have to sell it to someone else. She went ahead and paid them $400 at once instead of breaking it up. It wasn't on her report and the letter, all right? And the letter, it was not currently showing on her report, but it stated in the letter they'll delete it once paid. Right after that, Comcast sent her a collection letter. She's pretty certain she had it over 7 years ago.
Okay, so let's go back for a second. First things first, and maybe this is where Miss Divine's getting confused, or where things are getting confused, is that first, if somebody goes in and claims fraud, okay, when they try to dispute accounts, which is something that goes on and we've talked about in previous disputes. It's not how we remove accounts, but it's how some people do that, right? They attempt to go high levels of fraud, file fake police reports, submit fraud affidavits, etc. Okay? In that kind of a situation, when you get the account removed from the report, if they agree, and if the creditor agrees themselves, because now it's not just a given anymore. Now there's an actual investigation that goes on, and they'll disagree with it. Even if you get a police report, they'll deny it. But if in that case you get that kind of cohesion where the bureau and the creditor agrees with it, then she's absolutely right. You won't owe the debt. Okay? But that doesn't mean they're required to. So, for instance, the way we go in and remove debts, we're not removing them with fraud, right? So, in essence, we're effectively getting these accounts off your credit report. The bureaus are a third-party reporting agency, okay? They take information from the creditor, they take information from here and there, and they compile a report. We get it removed from the credit report. We don't remove it from the balance sheet of the institution. So if we remove your mortgage and you're 5 months late, you're still going to foreclosure. And even a fraud dispute can't remove the legitimacy of that, because the reality is there's a mortgage against it. It's collateralized debt. Same with auto loans. So the only time that would really work if you claim fraud would be to effectively admonish you from unsecured debt, like a personal loan or a credit card. But in a situation like us, when you're moving it from the credit report, then it's gone. It's off. You're not going to see it anymore. It's not going to impact your ability to borrow, but it's going to linger out there. It's going to sit out there. But in a lot of cases, if it's with a collection company, the way we get stuff off, once it's off, it's off. I mean, I think our percentage that we run is about like 5% where they get resold, and at which time we go and remove it again, and it drops down to like 1%. Because in essence, what happens is the debt loses its attractiveness. There's not a second and a third dairy buyers of debt anymore. All those small buyers are gone effectively. So there's just not somebody that wants to go and buy a debt that can't stick on a credit report. So in situations when if it does get resold, you remove it, and then the debt just lingers, and it'll linger because depending on state consistent, like not every state in this country allows you to collect debts for 7 years. There's a lot of states in this country that you can only actually collect on the debt for 3 to 4 years. Okay? And people need to know that in their own state too. That's part of the validation letter we're referencing and part of the things you should understand. Like I believe Texas is 4 years, Connecticut I think is 3 or 4 years. That means they can only collect from that debt going bad. They can only collect for 4 additional years. It's not the full 7 years. They can report for 7 years, but they can only physically try and collect from you. At which time, if you pay them after that, that's on your own goodwill, right? That's not them forcing, so you need to be aware of that. You need to be aware of what you're required to pay by. And then a lot of times, if it's a debt that's outside of that 3 or 4 year period, for instance, if you're in Texas or you're in Connecticut or whatever, they'll put in very small writing on the back page in very, very fine print. It'll say, well, this debt exceeded the statutory limit to collect, and any payments that are made in regards to it are in the goodwill of the consumer, something to that effect, right?
Ooh.
But they can, yeah.
They do it all the time. I never knew that.
Oh, they do it all the time, and then people don't catch it. Right, but they need to catch it, right? But going back to originally what Divine was saying, yeah, I mean, if it wasn't removed through some sort of a draconian measure, like, you know, claiming fraud or et cetera, where the actual original creditor agreed that it was fraud, then it's going to linger out there, even if it's off the credit report. It's exactly what's going to happen, and it sounds like that's what happened here. So,
she said this. She also said these. She said these bureaus are playing around. You send a factual dispute about 3 different dates of the last activity, and one bureau re-aging, which is a violation, and they send back documentation saying verified.
Yeah, I mean, there's a lot to that question, and there's a lot that goes behind getting the bureaus to actually pay attention to what it is you're sending. So I'd have to see everything to be able to give her an in-depth answer to that as far as that's concerned. But you know, I mean, again, it needs to be understood that, you know, on any given day, and I'm probably lowballing, each bureau probably gets 15 million maybe disputes. And again, I like to go back to the fact that, which I reference all the time, Experian is the most employed of the 3 bureaus, and I think they have 15,000 people. So you're talking about it's all done algorithmically. It's not a human being that's watching these unless it's a fraud dispute, which we talked about in another podcast, where they have full departments built out now that actually review these, which is why they just don't accept the police reports anymore and the fraud affidavits, and they actually get rejected now because they bulked up a lot. If you go back to 3 years ago, Experian had like 5,000 employees. They made $1 billion a year and they had 5,000 employees. I mean, you want to talk about a very profitable business? You have no overhead, and you're making $1 billion. You only have 5,000 employees. They booed that out of the 10,000 employees. Part of it was sales. Large majority of it was building a department to protect against these fraud claims, right? And all 3 bureaus did it. The point I'm trying to make, though, is the fact that all this stuff is done algorithmically. So in essence, these disputes need to be done in a certain capacity, in a certain way to actually register effectively. You understand what I mean? You just send in, like, you know, back in the, you used to talk about this, and I didn't ever really understand it, but you used to tell me that there was somebody that used to handwrite their disputes and send them in.
No. They come on. People who are doing credit repair right now looking at us, you know, you handwrite your dispute letters, and you write them for 30 of your customers on a daily basis.
Yeah, but I mean, putting stickers at the bottom with like heart emojis and stuff. I mean, it's stuff like that.
John's stupid. You know? He making fun of y'all, but
no, I'm not making fun. Listen, I'm not making. Hold on. I'm not making fun of anybody. I'm just saying that if you step back and you look at the structural component to the process, all those smiley faces and sympathetic writing, it's a robot. It's an algo. You know, you're not getting any sympathy points. There's no empathy there. There's no human being on the other end. You need to understand that. Now, this has nothing to do with what Divine had said. I'm speaking just generally now.
Yeah.
The fact that, like, you need to know how to communicate with that algo to get that algo to, you know, you need to know how those things are put on, like we do. how it attaches the file to the report, so you know how to get it off the report. Updating accounts and balances and stuff, that's an art to do, and it's an art within the, it's like, I don't want to say it's a video game, but it's not a video game. It's an algo. They're much more intelligent in reality. You just need to know how to communicate with them, sending in things like that. And a lot of these things I see online and stuff, they're just contrary to whether they were effective one time or two times or three times ever, which could have strictly been a coincidence. The majority of the effective disputes are ones that are done within the confines of understanding how that system works, right? And consistently over the test of time, and not have to constantly be conjuring up new ways to try and convince people that you have an edge on the market. You shouldn't have to convince people of these new things. Like, we joke about, what are some of the new terms that we've been hearing, like, over time, that they just continue to morph and it draws people in? You know, these, just like, what was the last one you and I joke about? What was the gardening?
Credit mirroring.
Yeah, so I'm saying, like, all these new things, you're always coming up with new things that you're pitching to people that you're edging the market. You're not edging the market. You're not edging the system. It's the same system. The bureaus have reported the same way since technology advanced, and their algo just continues to advance with technology. The only people that are getting scrutinized now, though, more than they were in the past, are the ones that are filing fraud disputes, because they bulked up that particular area. Those disputes get manually reviewed now, as opposed to done algorithmically like all the other disputes. So you're drawing unnecessary attention to the dispute, and you're exposing yourself to the possibility that not only is it not going to work, but you could potentially put yourself in a really tough position, because there's a lot of things that are getting violated in that instance. So I
spoke to a guy today. He called me. 903 or 901 area code, Tennessee, I think, Alabama, somewhere. He's been watching us for 2 years, because when he texts me, every time somebody texts me, they text in the Google Voice number that I've had since 2008, 2009. So I know from the last time you text me. So I'm seeing when he texts me, like, bro, you contacted me, I believe, last year, January 2019. Anyways, everything is still on Experian. And he doesn't know how they disputed. Okay, he's trying to get 2 or 3 negative accounts removed from his Experian, but Equifax and TransUnion are totally clean. I asked him, so how did these people dispute? Because what did they tell you? What happened? Because their claim is that Experian wasn't getting the disputes, therefore he wasn't getting results from them. And I go, so why didn't they fix the address on Experian if they were working on it for such a long time? Oh no, they told me that it was supposed to be off in 6 days. Okay, and I said, maybe you filed police report and did an affidavit, filed everything as fraud. Yeah, I don't know how they did it, but that's what they probably did, something like that. And and every time nobody,
not to interrupt you, but every time we got to work behind that, nobody wants to admit that, especially when it doesn't work.
No,
right?
But you know what I told them?
Most people, even the most avid of understanding, of as far as experience in this business, knows that's a one-shot Dillinger, right? That's a one-shot or done. If it doesn't work, you can't keep going and doing it again and over and over and over. And we've had clients who've gone to companies who just keep submitting. I'm not laughing, but
it's okay to laugh at them.
but hold on, who just keep submitting. We had a client start 3 or 4 months ago who said that the company kept submitting a fraud affidavit and the police report over and over and over again. Kept submitting it for like 3 months. I go, you got to be kidding me. And he was like, no, they just kept doing it. I go, well, what, weren't you concerned? Well, I don't know. I mean, I trust them. And I'm thinking, dude, it's one time if it doesn't work and they come back and they're like, no, we don't believe you. This isn't, I mean, you're fine. In a lot of cases, these aren't legitimate police reports, right?
Yes.
These are questionable police reports that are being filed. Do you really want to keep submitting that? Not to mention, you've already hit a wall where somebody's like, no, your credibility is not legitimate. We've confirmed based on this, and this. Do you really want to keep forcing the issue? And I just don't think people understand the significance of that. And I think that's the ones that do, after the fact, and they realize that it doesn't work the way it did back in 2010, 2011, 2012, 2013, 2014, which it was very effective then because the bureaus weren't prepared for it, hence the extra employees now. That, I know it still works in some instances, don't misunderstand me, but in a lot of cases, it can't be applied as the same solution it was back then. And as a result, getting people that are getting in situations, whether they know it or they don't. And I think in a lot of cases, the majority of the cases, they know. They just try to play dumb.
Well, when I started finding out that it was like that, I told him that, oh man, this could take us 12 months or more. And he's like, yeah? And I'm like, yeah, I mean, that's how I speak to people like you. Every time someone like you calls me who has done fraud and police, I try to tell you guys the worst case scenario, because you guys are not patient. You see one video or you've been watching the videos and people just forget that we've been doing this for such a long time, and then they call and they've been watching the videos for some time, but they still want an answer that they'll get sold on. So I'm like, nah, bro, this could take me 2 years to remove. And he's like, wow, 2 years? And then I tell him, well...
Yeah, maybe 4 years. Well, wow, 4 years? Yeah, maybe 8 years. Maybe
John, on top of that, he's monitoring his credit in 4 different places. This guy's driving himself crazy on just accounts.
He's blowing $100 a month on monitoring. So
on just 3 or 4 accounts on Experian. And I'm like, bro, this guy, cuckoo, I'm like, he's kind of crazy. You know what? I'm going to tell him it's going to take me 2 years. Maybe he'll think it's too much, and maybe he'll just go away. And not told him.
Listen,
and he started laughing.
But listen, here's what it is. And this is what it boils down to. I'm sure the guy is just, he got sold on a 15-minute solution, right? And now he's 1 year into a 15-minute solution, right?
Yes.
And he's probably driving himself nuts, right? Because his original expectation that was set for him was that, yeah, man, we'll get it done in 6 days. Okay, now you're 9 months later. Okay, and he's still listening. Obviously, he's still on the hook with whatever company he was working with. So that expectation, it becomes an obsession. So now he's checking everywhere, probably every day, to see if anything's updated or changed, because he's probably, I don't know if he's being properly communicated with or not, but this is why we say...
No, he stopped talking to them, but how you going to... I said, bro, you only need one credit monitoring site. Yeah. All right, because I told them, many people like you, they like to micromanage us, right? And we're like, nah, we don't want to be micromanaged, so, we'd rather tell you that it could take this long and have you make a choice if you want to do business.
No, but you know what it is? Honestly, it's not to interrupt you, but it's not so much. Nobody in the world likes to be micromanaged. Okay, nobody. But the fact of the matter is, questions are fine. We encourage questions all the time. I think where the problem comes in is that, like, expectations are everything in life. Setting expectations. I mean, I firmly believe it doesn't matter what walk of life, but specifically in this business, right? And our expectations that we set for clients are based on an average. That average is based on over 10,000 clients. Okay, I don't know how many other companies can say that and work their expectations that they set off that kind of a number, to where when we hit, we're normally right in that area. It might be on the low end, it might be on the high end, might be right in the middle. Might be some people that run a little longer, some might get done a little sooner. But in a lot of cases, the expectation we're setting for clients is an actual formula that we arrive at that is based on a very large meeting of people, that we set the expectation based upon that, so that the people can walk into it knowing, right? I mean, we could easily tell people, yeah, we'll be done in a week, and then argue with you for the next 12 weeks until we get done, right?
Hell nah.
Nobody's got time to argue because it's a hard enough process already to get files clean, right? It's already hard enough. The amount of work that it takes on our end to kind of get this stuff clean, it's a lot of work. Nobody needs to argue. So, getting the results is half the business. Setting the expectations is the other half of the business, right? Which allows the clients to psychologically wrap their brain around when they think it's going to be done. It also allows them to start prepare, psychologically for whatever goals they're trying to achieve. And it can all be done in a very functional, reasonable, efficient process, right?
Correct.
Because you don't just wake up tomorrow and you buy a house, right? That takes some time. You got to start figuring that stuff out and wrapping your brain around that. It's a process, and it's not always a process that takes forever. It's a process that gets, for a lot of people in our situation, gets done between 2 and 4 disputes in most cases.
Correct.
That's normal, and that's average. We don't promise people 6 days. We've had clients that have gotten done in 6 hours before.
Correct.
That's not the normal. I mean, we can do it. It's not the normal. It represents a small percentage of a broader, median of client, but at the same time, it's there. It's an element. We're not going to promise people 6 hours. Get started with it. We're going to get you done in 6 hours. That's just not good business, and it's not taking care of the client either. Because, obviously, trying to earn, you're doing business from a distance, right? With
Correct.
Clients, they're not coming to an office.
Correct.
In order to be able to earn trust, you got to be able to come through on what you promise, right? And setting the results are a big deal, but the expectations are also a big deal. Right, and it allow clients to get a level of comfort, and you can build the trust based upon that. So, I mean, we try to do a really good job of setting the proper expectation and preparing accordingly, so that there's not this level of, like this guy that you're describing, who sounds like he's just 12 months into a 6-day job, right? And he's just losing he's just going nuts, right? Because he's just been monitoring and hugging it so tightly based on that 6-day job that he's just been. And I'm guessing he's probably been going from 6-day job company to 6-day job company, right?
Cool.
Which effectively is just compounding the problem, right? Because you're going to one bad company, then potentially, and you go to another one potentially, and it just makes the situation worse. And unfortunately, it happens.
Correct.
So,
correct. Well, that's for that customer. I told him to log on today for the podcast. So maybe he's listening, maybe he's not. This is all not making fun of you. This is a forum where we all learn from each other, okay? So I got Willie Dolinko, and he has like a real estate question. He says, homeowner did a deed in lieu. Credit card was still on title. They foreclosed. They just called 8 months later. How can I get that credit card section to go away?
You're going to have to read that again.
Okay, homeowner did a deed in lieu, right?
Okay.
Deed in lieu. Credit card was still on title. They foreclosed. They just called 8 months later.
Title. They still foreclosed. No, if they foreclose, it doesn't work like that. So, in order, if they got the credit card on title, they would have had to have gotten a judgment, right? The judgment would have only been the way that they would have been able to attach the credit card charge off to the property. And if it was attached to the property when the property was sold, that would have relinquished. Now, granted, they could have sent you something after for any difference, but in order for them to be able to collect with the deed in lieu on the property, they would have had to have gotten a judgment first. Now, he would know if that happened or if it didn't happen. I don't know if it happened or not. But you can't just, if you're a credit card company, you can't just, without a judgment, you can't just attach to people's assets. That's not how it works. You have to get a court order, which is a judgment, to be able to attach to people's assets, and then you can collect that way. Without that, you can't do that. Otherwise, it's a truly unsecured debt, because that's what you did. You took out an unsecured debt, a Capital One credit card, if that's in fact what it was, or whatever. That's an unsecured debt. There's no debt collateral to that.
Okay.
So they took on that risk. In order to be able to collateralize it, whether it's through wages or property, they'd have to take you to court and get that, and they have to actually get that judgment. And normally, when people don't show up, they get the judgment, and then they attach to all you. They find out where you work. They try to garnish you. They find your bank accounts. They find your assets, and that's the way they hedge it. If they get nothing out of that after a certain period of time, then you'll see them try to collect in other ways. But again, go back to what I said earlier about the period of time they're allowed to collect. There's only a certain window that they can collect in. So, especially state specific. So you should be aware of that too.
Okay. We have now Claudio, and he says, so I owe a collection to a Bank of America. It's been over 7 years now, and they're sending me emails to pay up.
Okay. So here's another thing that we see a lot, that people have a lot of problems understanding. So the calculation of the debt and the years, the aging years as it applies to reporting, etc., is based upon the date. When it's reporting, it's 7 years from the date of the first late. That's 7 years from when you opened it. It's not 7 years from when you closed it. It's 7 years from the date of the first late. So if it's beyond that, I would find it would be very difficult, especially when you hear that you think Bank of America specifically is reaching out. It would be very difficult for me to believe that Bank of America is still holding on to, I don't know what kind of debt it is. It sounds unsecured. Holding on to an unsecured debt from 7 years ago, when in reality, there's a certain law that's in place that they have to charge off unsecured debts that aren't performing after a certain period of time. So there may be some gray area there. I don't know if it's a collection company collecting on behalf of was sold, was originated at Bank of America, sold to a collection company, then revert back to the first 45 minutes of this call where I said that, you need to hold them accountable. It's for specific reasons like this. And the fact that you will get collection companies that will collect even outside of the 7-year period. That happens too. So always be diligent about it. I mean, there's clients of mine that have gotten collection letters from even Midland where it says, again, in very small print on the back, this debt is outside of the statute and the reporting to collect. Any payment made by the client is done in goodwill of the client. Something that and it's the writing. You need literally a microscope to read it. It's so small, but it obviously allows them the opportunity to do it and claim that they put it in writing. So,
okay,
I gave a long answer to, hope I answered whatever he was asking.
Okay. Miss Divine said, as if you're contesting. I think it was a continuation from what she wrote. And she says, as if you are contesting that it's verifiable, you're contesting that it's inaccurate. Then they say stuff has been updated, yet the last day it was updated was years ago, showing no investigation done. So next follow-up should be method of verification or pointing out the last date updated hasn't changed, or trying another dispute reason like DOLA or high balance being lower than balance owed.
Yeah, I mean, verification, I mean, again, that's like, verifying the debt itself, that's the easiest thing for them to be able to do. That's what we talked about earlier. So that should never really be on the list, because effectively you're starting with the broadest and then you got to work down. You're starting from a macro level when you start there. It shouldn't even be in the toolkit. I mean, it's the low-hanging fruit. It's what people do on Credit Karma. They click, this isn't my account, and I didn't open this account. This account is fraud. That's effectively the same thing, right? Yeah. Where you're not validating, you're just saying it's not yours, and you're hoping that they don't have anything. You shouldn't even waste a dispute on that. As far as the subsequent levels she's talking about, I mean, look, everybody can do whatever they feel like in any way that they want to do it. We're just trying to give you the path of least resistance here. When you go in and if you've disputed things a certain way and that it continues to get disputed in some sort of a deviation of that same broader way, they're going to deem the dispute frivolous and they're not going to entertain it anymore. So if you're continuing to send disputes, but you're not seeing them update anything from the dispute, it's because they're literally rejecting the dispute. They're not even looking at it because it's being booked in the same binary fashion that the last 2 or 3 were. And they're allowed to do that. They're allowed to deem a dispute frivolous if you're just disputing the same thing over and over again in their eyes or in some small deviation of that. And all of the bureaus send a letter relating to it, that they're not going to honor it, they're not going to acknowledge it, so on and so forth. So again, I'd have to see specifically more relating to what it is, but some of that more obvious stuff is very easy for them to rule out. The high balance, things like that, stuff like that. I mean, you got to understand something. At any point in time in your credit report, that's not a real time number, right? So if you look on your credit report today, if you're somebody that's actively using your credit cards, your balance isn't going to be reflective of your balance today on your credit report. There's a lag. The TransUnion themselves, as a bureau, report every 60 days. They report 30 days. So they're always 2 months behind, always, on the reporting. And that's not because they're doing anything wrong. That's because that's how they report. So every 60 days they report 30. So their balances are always going to be off. But if you ask for a payoff, right, and you send in a payoff, they'll likely update it. But the reality of the situation is not going to change anything. You know what I mean? It's not going to alter anything. It's not going to be grounds to remove the account because, in essence, it's how the system works. So you're trying to effectively ask them to update the high balance and speed up how a broader system is already structured. It's not going to happen, and it's not going to get sympathy. If there's a situation where there's like a if you take into consideration the fact that, for instance, again, TransUnion reports every 60, they report 30. So they're always floating 1 or 2 months behind. Experian and Equifax are the same way. They're always reporting 30 behind. If you go late in February, you're not going to find out about that to the following month because it reports on the following statement.
Correct.
So it reflects that in real time. So you're always a month behind. So when people are talking, I constantly, they say the balance is wrong here. It's just, and I'm not saying this applies to Mr. Vine. I'm speaking in general now. I think a lot of people think that it's supposed to be real time numbers. It's not like the stock market. It's not real time. It's real time as opposed to when they report. And these accounts report on statement dates. It's not specific to just credit cards. It's not specific to all of them report on the statement dates. And if you take into consideration, it doesn't report that much till the following statement date, and TransUnion won't report till the following statement after that, because they report every 60, 30. They're reporting 30 days. Then you realize that they're always going to be at least 1 month lagging, and TransUnion more than likely is going to be 2 months lagging. That's the way it's always going to be. So just if you understand that, then the balances will come out of play, because there's not going to be a thing, because they're not going to get the balances wrong. If you have a problem with the balance and how the balance is reporting, that's going to be with the creditor, and the creditor can make that adjustment in real time for you, right?
Correct.
But as far as the reporting is concerned, it's going to be very difficult to get that acknowledged based upon that.
Okay. Okay, cool. So I got People's Champion who says, how can I get help or assistance to help with my credit score? I have fraudulent child support on my credit, a charge-off repo, and a couple of bad credit cards. Well, People's Champion, you can email me right here, right? Email me and say you want credit repair, and we'll send you where you need to go to get credit monitoring so that we can review your 3 bureaus and send you a price for the service. But as far as saying this is a fraudulent child support, Jay, how many times do we get, this doesn't belong to me, and it's reporting on the credit file?
With child support in particular, or just generally?
Generally, because it pertains
we get it all the time. But because there's normally more to the story, right? The credit report is binary. You're looking at something there's no explanation behind it, and with child support and stuff, there's always a story, right?
Yes.
That's not being sarcastic. That's being realistic. There's a story between the mother and the father, and so on and so forth. So there's legitimately story behind it. The problem is that the bureaus don't take that into consideration. It's a very binary look at a much broader issue. When it comes to charge-offs and stuff, though, again, in a lot of cases, there's an emotional attachment to the client rather than looking at a binary, which it is, because it's, that's how it's even processed. They look at it from an emotional perspective, and when there's an emotional perspective, there's always background to it, and if you apply background and emotion, then there's got to be something not attached to them, right? Or there's got to be a reason it shouldn't be on there, outside of the obvious reason. So either way, the good news is they all come off anyway.
Correct.
At the end of the day, whether it's right, wrong, or indifferent. And I always encourage people that if it really is somebody really did open up an account in your name, or it really is fraud, then you should definitely follow the right channels as far as filing a police report, submitting a fraud affidavit, because they'll be the ones. Again, now there's that extra layer. If you're somebody that's really a victim of identity theft, legitimately, that's what you should be doing, because that's the path of least resistance. They'll do their research, and not only will the creditor remove it, but the bureaus will remove it, which is what you need if you didn't open the account. So if you're not, then and it's something where it's debatable as to accountability and such, and you get with us, we'll get it off.
Unfortunately, though, Jay, that's a lot of sweat and tears going through, doing the police report, having to call the bureaus. No, this wasn't mine. This is.
No, you're right. You don't have to call bureaus.
Well, I know some people who had done legitimate fraud on them, and they've been on the phone with bureaus and sent information.
Yeah, well, they're making their life more hard. They're making their life more difficult. It's very simple. You call the creditor, you send a copy, you send a package in overnight of the actual, the police report and the affidavit detailing it. They'll do their investigation. Send it into the bureaus the same way. It'll get sent to the special handling department after it's open. They'll do their investigation, and then they'll both make their independent decisions. You don't have to argue with anybody on bureaus. You don't have to do it unless you're adding freezes and such. That can be done online now. So there shouldn't be any reason you should need to be calling. I think that's probably just understandably so an emotional response that people think they get somebody on the phone and they're gonna get some kind of peace of mind. The problem is you call somebody, unfortunately, at any of the bureaus at any point in time, you're either going to get somebody from the Philippines, right, or you're going to get somebody from India. So, neither of which understands our anything about our economy, much less our credit, and they're certainly not there to give you peace of mind and make you feel better about the situation. So they probably fall short both ways. So you're probably better off just trying to do your best to just find the quickest route there if you truly are a victim. But I mean, again, 99.999% of our clients are not that, right? They're not people that are victims of that kind of a situation. It's people that have run into situations and that doesn't apply to them and shouldn't apply to them. I'm just saying that type of a scenario, if you're really a victim, that's what you should be utilizing, because that's your path of least resistance. And if it really is, then they're not going to give you problems in taking it off.
Correct. So OJ asked about California. That what's the statute of limitations there on that?
Off the top of my head, I don't know it. I can always look, and we can email them after I look. You can also Google it too. You can just write in, Google California statute of limitations to collect a debt, and then normally it'll give you a broad topic at the top and tell you exactly how long they have the ability to collect in California.
Okay.
California's real liberal, so it wouldn't surprise me if it's like 3 or 4 years, but I just don't know specifically.
Yeah. And then we have Anthony Johnson, who says, how do you remove bankruptcy? I mean, we dispute different aspects of the debt. I mean, John will let you know more, but if you want a quote, but is Anthony Johnson our customer? I feel like he's our customer.
We have a customer named Anthony. I don't know if it's the same Anthony Johnson.
I don't know if it's the same Anthony Johnson, but Anthony, are you the same customer? But basically, bankruptcies. I mean, I have playlists of videos showing us, removing bankruptcy since like 2012, 2013. So yes, bankruptcies can be removed. Matter of fact, if you want to do it yourself, we have a $99 do-it-yourself credit repair system, and you can definitely
but the other thing, but here's the other thing, not to interrupt you, but the other thing that needs to be understood in any situation is that, since we've gotten on a little bit of the topic about the fake fraud filings, etc.
Yes.
If you're somebody that goes out, you need to understand that anybody coming behind that is going to have a lot of difficulty. Right. Now, that doesn't always mean it takes a lot of time, and I know we talked about that earlier, but an expectation needs to be set, and it can't be like the Craigslist mentality. If you're going to jump from company to company, you're not ever going to get to where you want to be. You're only going to make the situation worse. And we've said long before in regards to this process and in regards to these podcasts, when we talk about this stuff, people that jump from company to company are like viruses. They give people like 60 days. They try them out.
Yes.
They don't really get any momentum going, and then they move on to the next one. And all you're doing is making your situation worse, and you're infecting the minds of other people because you're telling them that makes sense on these credit boards. The reality is all you're doing is compounding an already problematic situation because you went and filed a fake police report, which you shouldn't have done in the first place. You already solidified a lot of these counts as far as the verification of the debt itself is concerned. So now anybody that comes behind that is going to need some time to work around that kind of a landmine, right?
Correct. It's
just the reality of it. And if somebody is like the client we referenced earlier in this call, where they submitted that fake police report and that fraud affidavit 3-4 times in a row, what do you think is happening to that file when an individual is handling that 3-4 times in a row, and they're like, no, this is a fake police report, no, this is a fake fraud affidavit, and they're at the bureaus and they keep submitting it like it's, understand what I mean? And it's blatantly incorrect, at least in their eyes. The point I'm trying to make is this is why expectations are so important, because it's like there needs at some point in time, and look, there will come that, because I've seen it happen since, we're doing this a long time. And in the beginning, it was the expectations people would promise to, 30 days, 2 weeks, 10 days. I was like, how are you promising anything? You know what I mean? And now you're sitting in a situation where the time frames and the reality has started to set in a lot of people's brains, right? Correct. They're starting to be able, because the business isn't so much in its infancy as much now as it was in the past, to where people are starting to be able to make their own assumptions, at least in a lot of circles, right? In open-minded circles, not on like Craigslist, but like in real circles of people, intelligent people that are starting to realize how this process really works and that it does take time, right? And when I say time, I'm not talking like long time. I'm just talking not like 6 days, right? Like you referenced earlier. It's Correct. A process. It's a process that needs to be stayed with and adhered to. Jumping from company to company only compounds the problem, and it's only making it worse for the consumer. So I got off on a tangent there, but I mean, because I was thinking about we're referencing removing BKs and stuff, and I feel like as far as like clients typically view BKs as being very difficult to remove. So
Yes.
in some cases, you see them go that route first, filing the fake stuff where we got to come behind it. It makes it very difficult to come behind. But then we ultimately get it done. So we always stress patience, whether it takes us 30 seconds or, 4 months. I mean, either way, it's always as soon as possible.
Correct. Okay, so now we also have Anthony said that no, he's not a customer. He says. I said, well, we have Anthony Johnson. Anthony, that's why we ask. But also Anthony says, no. OJ says, how can we trust the credit agency's dispute? They can't even get basic disputes right.
I don't understand the question.
Well, he said, how can we trust the agency's dispute? How can we trust the credit agency's dispute? Well, that is true. That's a hard question to understand. I'm thinking he's meaning, how can we trust the the collection company's dispute? They can't even get basic disputes right.
Well, I mean, and listen. Look, if he's saying you can't even trust the actual bureaus themselves with getting a dispute, I mean, if you do it, you know what you're doing. You get notifications. It's all a transparent process.
Correct.
It shouldn't be a blind process. Even when you don't have to be submitting online to still get online correspondence in some cases with these bureaus. So, if you're flying blind and that's what you're banking on, of course, it's going to make your mind wander. If you're dealing with a professional and they know how to obviously properly submit and be received, etc. I mean, look, I can understand, and this is why we do these podcasts to educate. I mean, I don't even know what the ratio is behind people that listen to these podcasts and learn and actually start with us. We don't even have a clue what that breaks down to. I know some of our existing clients listen, which is great. I know there's a lot of people that listen that aren't clients of ours, which is also great. But part of the reason is to kind of eliminate some of that confusion. And I can assure you, I haven't had a situation ever where the bureaus just don't have either confused the dispute or haven't processed the dispute that was submitted. So if that's happening to people, I can assure you it's because it's not being done properly. Right, and that's like anything. It's like trying to install your own plumbing, right, or install your own electric. If you're going to do it yourself without the background, you're going to run the risk of fucking it up, right? And that's just the reality of the situation. And I'm not saying that's what he's doing. I'm saying that the bureaus are run algorithmically. There's not a human being there that's saying, you know what, this guy's pissing me off because he keeps sending a dispute and I'm going to ignore it or I'm going to book it differently. It doesn't work like that. It's all trackable through an algo. So once you realize that there's not all these gray areas involved and there's not some old man, that's at the other end of the desk processing your dispute and it's just a grumpy guy that doesn't have any patience for you. Once you realize that the human element 85% of the time is out of that dispute and it's strictly done through an algorithm with you can upload your mail disputes without having to actually mail them. I don't know if you guys are aware of that. And you can obviously dispute online, but I know online people tell you in these credit boards that disputing online somehow relinquishes your rights, which is complete bullshit. But the fact of the matter is if you actually stop using credit boards as a way to educate yourself on credit and you actually talk to people that have been doing it and know what they're doing, it'll make your life so much easier. And if you want to get any idea, talk to any of our previous clients. I can tell you how many of them are now in the credit business, especially people that bought our systems. But not only that, but just their understanding of the system now that they get a very binary and black and white and proper explanation as they're working through with us as service providers and them as the client on why things happen, how they happen, to the degree they happen. A lot of the nonsense is gone. All that stuff on those credit boards is minutia. All it is noise. And all noise does is confuse people, especially when you're already confused. My suggestion would be, if you're somebody that feels as though the bureaus are out to get you, then you're getting wrong information. I don't think the bureaus have a personality whatsoever because there's no human being behind it. It's all done algorithmically, and there's no algo that doesn't like you as a person or doesn't think that you shouldn't have a 750 credit score. I assure you of that. So there's ways to work around it, which is why we've been doing this for 10 years and over 10,000 clients. It's workable, trust me. And if you don't trust the bureaus, then and that's the perspective, for whatever reason, because you don't think they're, capable of making adjustments, and you just probably aren't being provided the right information in order to be able to make that determination, because it definitely works, and it works consistently.
Well, I have Anthony Johnson. He just finished saying, what about the time frame of disputes? The CARE Act has changed the time frame now. There is none. Is that true?
No. Who said the CARES Act?
The CARES Act, yes.
So he's saying that the CARES Act has said there's no time frame for credit disputes?
He says something else right here. There is no time frame. 30 to 45 days change with no end of an investigation now because of the COVID.
No. That's a rumor. That's another rumor, just like the bureaus were going to be closed, just like the creditors. Yeah, I couldn't tell you all the rumors that I've heard since this started.
Is that a new one? Is that a new one, Jay?
I mean, that's the first I've heard that one. So, I mean, we did have a client who started last week, though, who her old provider, who she left to start with us, told her that the bureaus aren't responding because of COVID. So that was still lingering out.
Oh, there. Yeah, I had, whatchamacallit, which was surprised when he told me, Eric Gigley, he told me that the guy he was using before said that something about the bureaus are not responding back, so it's gonna take. So give me 45 days or something like that, or you gotta have to give me time, and we're like,
yeah. So here, let me give an example. So the client I was explaining started a couple weeks ago, or 2 weeks ago, whatever.
Okay.
But that's what the provider told her. I said, look, I can assure you, we submit disputes every day for every single day of the week. They're getting back within the time frame they have to. They're doing it. Nothing has changed. Nothing has changed in their response time. Nothing. Not at the heat of COVID. It wasn't a delay. There wasn't a glitch. There wasn't a speed bump. There was nothing. But she's like, well, he just called me again now, and he said, that he's sure it's not going to get back. I go, listen, I'm not going to. What you're suggesting is ridiculous. So let me just show you. Give me 3 weeks. Let the dispute get done. That's exactly what I'm talking about. Of course, dispute just got done 3 days ago. A bunch of deletions. She was ecstatic, right? So it's like, this stuff. I mean, there's so much misinformation that the real information is so hard to discern. You understand what I mean? The real information and the reality of this, the fact that it hasn't deviated that much over the last 10 years, the fact that their online portals are almost identical, the fact that their algorithms and how they attach and detach accounts and reports are almost identical, people are just making their lives so much more difficult trying to find all these other stupid angles or all these other ridiculous excuses or all these other cockamamie schemes and this and that and freeze this and itch your leg in this way while you're sitting up and shake it all about in order to be able to get it off, but it only works for 3 weeks and then you got to do it with the other leg. It's just nonsense, right? It's nonsense. But in order to be able to get people to believe, what we describe is way too simple, right? It's way too simple and it's way too rational. It makes much more sense to freeze this, that, and the other thing, and to file this, and to do this, and know this guy at the bureau, which nobody knows, but you say it so that you sell something. You know what I mean? It sounds so much more glamorous, right?
Correct.
To have all these different angles than to just be like, listen, I've been doing this forever. Here are the results. We have thousands of videos. We have thousands of results. And we've been doing this for standing the test of time now, probably longer than 95% of the other companies doing this, as efficient as we are doing this. But it doesn't matter because you still get met with the same resistance, which isn't ever validated and doesn't ever stand the test of time, much less days, let alone weeks. So it's hard to convince a consumer. That's why we don't convince consumers. We give them the option. We give them all the information and say, listen, we're giving you the right information. We're going to give you the opportunity to make the decision that's in your best interest, that's aligned with your goals. And I think that's gone a long way with like the clients that we've had over the course of time getting much better. I'm really grateful for all the clients we get these days and just their perspective and their overall approach to the process and to understanding the process and understanding everything and how credit works and stuff, and their willingness to want to learn more as they go through. So when they, for lack of a better term, go and fly on their own, they're doing it the right way this time, right? In a sustainable way, in a way that they know they're going to be able to manage going forward, so they don't have to get behind the same problem they came into now for us, right?
Correct.
So, it was a long-winded response, but like most.
No, it was very good, very well said. And that was Anthony. Was a time frame. Okay, so now we have Miss Divine, who well, let me see who said again. What's up, Curtis? What's good? Good evening, Curtis. How you doing? Um, so now we have Miss Divine. Okay. Another thing, the very first step of credit repair is to remove outdated addresses, correct personal info. When you try and remove old addresses, they say the creditor is reporting an account, so they can't remove them. What do you do in that case?
Yeah, that's not the first step, though, right? The first step is, I mean, I'm not going to get into the whole. I don't know if she's quoting Credit Life or whatever, however we're doing it right now, but this isn't for that, right? So, but I'm telling you that that's not. She's describing Experian, right? That Equifax doesn't do that. TransUnion doesn't do that. Okay, Experian does that.
Okay.
So that would be specific to Experian, and even with that, there's the right and the wrong way to do it. So, and it doesn't sound like it's being done the right way because it shouldn't be itemized. It shouldn't be separated. It shouldn't be delineated apart. Things should be done in conjunction. It's not a 1 and then a 2 and then a 3. It's a blended thing, which is detailed. So, if you got questions about the Credit Life system, Divine, just email the support. I don't want to get into the conversation about the specifics of that as we work through it. But if you do have questions about that, we have support that's, answers questions all day. So
you heard that, Ms. Divine. All right, so we have our customer right now, Anibal Colon. Hello, Anibal. Hope all is well. He always says, "What's up, papi?" Anibal, you the man. Listen, he says, question, I have my wife here watching with me. She would like to know what's the protocol on having a student loan to a school that closed. Also, this is going back 10 years. Thanks again, fellas. Sorry if it's a little bit off topic. No, don't worry about it. It's we answer all questions.
Nothing's off topic. It's fine. So, if the school is closed, then if she actually got the education, then she's still responsible for it because that means somebody would have bought the debt. Right? If the school closes while you're in school and you don't get to finish it, then or for some reason the school, I forget what the other exception is. There's another exception relating to something happens with the school where they'll actually discharge. There's a form you can submit with the Department of Education, Navient or Fed, whatever, where it's like a discharge. They do the investigation and they'll effectively discharge the debt. But if she actually got the degree and then the school closed, somebody bought that debt. Because they're not just going to let that debt go and say, oh, you know what? You owe me $30,000, but the school's closed. So effectively what happens in situations like that when the school goes out of business, they sell their receivables. So let's just say they have, 100, this is round numbers, $100,000 worth of receivables. They'll sell them to, an investment company, typically a school loan investment company. They'll buy it for 70 cents on the dollar. They'll make the 30% juice on it. They'll get some liquidity for those loans at that particular point in time, and then, they get out from underneath it.
Okay, Anivan, and by the way, we can still remove it too, so that's that answer.
Yeah, for sure. Yeah, for sure.
Anibal, sorry. Freddie Anguiano, what's up, fellas? Late to the party. What's up, Freddie? Yes, California customer always logs on. Hello. OJ, Anthony Johnson, what about the time frame? CARES Act is there. Curtis says, good evening. Armando says, I did a dispute on a late payment with Capital One and got the dispute respond from the creditor as updated on Experian. Okay.
That sounded like a statement.
Yeah, that's it. Okay. All right.
But just for the record, if you get if you did the dispute with Capital One, you wouldn't get the response from Experian. If you did it with Experian, then you get the response from Experian. If you disputed something directly with Capital One, they wouldn't send it to the bureaus or report it back. That's not how it works. Okay. It does, however, work the other way. If you dispute with the bureaus, you'll get a letter back from both the creditor and the bureau. But that's the only thing I would inject there.
Okay, and Anibal just says, yes, she completed school.
Yeah, so she's going to be responsible for it.
Okay. And And now Armando Gomez, what's up, Armando Gomez? How you doing? Hope all is well. I'm not a customer. I'm a student. Thanks for the info, guys. Okay, cool. So we have Anthony again. Only reason I brought it to you guys' intentions is because I literally read it from the CARES Act from the site. Thanks for the information, guys. I'm not a customer. I'm a student. Thanks for the info, guys.
Mm-hmm. Yeah, I don't know. I can't speak on that.
Yeah.
I can tell you the CARES Act was passed a month or two ago.
Okay.
That's not something new, and the bureaus have not deviated in their response time. So I haven't read it all the way down, every line of it.
But when has there ever been something for the bureaus, Jays? You get COVID, you get stimulus check, you get other things. Lower interest rates. The Fed lowers. It's never anything about credit.
What do you mean?
There's never like a break. People get a break. Like, the judgments not going on to the credit report anymore. Remember that one?
Yeah, I remember. And the medical collections. Remember that one? That was going to stop.
No, that never stopped.
Medical collections were going to stop. Judgments were going to stop, and it's all with the medical collections and the judgments were all, and we talked about this before. The latest craze is that everybody's scaring everybody into thinking FICO 10 is now going to be the next thing, and it's going to roll on tomorrow, and everybody's financial world's going to change. That's the doom and gloom right now going on.
Yes.
The problem is there was a couple FICOs ago where one of them didn't report medical collections. That one got ignored. There was another one that changed. There was legislation that was passed in certain states that changed the requirement for reporting judgments. That was never adopted federally. Keep in mind, in order for things to get actually applied federally, they have to be also approved federally. Just because something's approved at a state level doesn't mean that the federal government approves it, right? There's certain states that you can smoke pot in. The federal government has not legalized marijuana yet.
Correct.
So there's conflicting views there. So just because you see a state say we're not going to report judgments on credit, well, you have absolutely no bearing on anything because you have no reporting instrument, right? So I'm just saying, just because you read something on the internet does not necessarily and technically mean that it's functionally correct when it's not in the right context.
Each state holds different laws and all that stuff. See, John should have been an attorney. Did you ever think about being an attorney after doing real estate investing, being successful in real estate investing, Jay?
Did I ever think I wanted to go back to college for X amount more years? No, not at all.
And then stay in a room.
Here's what I think. This is how I am with everything. In order for me to want to do something professionally or just in general, even just in any walk of life, I have to be interested in it, and then when I get interested in something, I immerse myself in all the details of it, so I understand all the particulars in the game, right? So I understand every part of the game that's being played. This way, I know what move to make at any particular point in time, or at least I can understand the moves that are being made that people don't understand, which is why I always say to people we like to do these podcasts so that you can start playing the game that way, right?
Correct.
You start understanding what's going on, because if you understand everything that's going on or why it's going on, it allows you to make a decision. Or, if you treat life like a chess game, it allows you to make a move that you wouldn't otherwise make, but could benefit you exponentially if you know or you have an understanding of what that person on the other side might be doing as a result of knowing all the details, right?
Yes.
And, obviously, learning the legal side of a lot of these things is a large part of understanding the game. You know what I mean?
Yeah.
But that doesn't mean I want to go out and practice law.
Correct.
It just allows me to be better suited and more educated in the subject matter that I'm talking about.
Well, we appreciate that you didn't go to law school, Jay.
My wife did, though. My wife did, believe it or not.
Who? My
wife. She went to law school.
Oh, she's a lawyer?
Well, she doesn't work anymore, but she is a lawyer. Yeah, she went. Well, she's not anymore, but she went to law school, and then she went and did legal stuff at Merck for.
The pharmaceutical company.
Yeah, for before we had our first kid, and then she stopped working.
Oh, nice. Okay, so we have...
There's a lawyer in the family. Yeah, there's a lawyer in the family.
Oh, good, 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 good. All right, cool. So we have Carissa Tally. What's up, Carissa? And she says, even if you let the student loan removed from the report, you still owe the Department of Education. Student loans are the only loans that you will have to still pay. That's why you can't sue for them. Um, they are the only government loans that an individual will still owe until paid, even after getting it removed. You're
It's not the only one, but it's the one that'll keep chasing you around endlessly and endlessly and endlessly. I mean, I've had people that have come to us dodging them for 10, 15 years,
That is true.
and they haven't been able to garnish them. They haven't been able to get any tax return money because that individual hasn't done it, so they haven't had a way to get them back to the table. But they don't give up, trust me.
Oh, no,
but
I
clients all the time. We'll get it off the report, but it's not going away.
But I get people that call me and they're about to file bankruptcies and they're gonna put the student loans in bankruptcy.
They don't discharge in bankruptcy.
I know.
But there's people. Here's the reality, though. Here's the scary part. Right? There's bankruptcy attorneys that'll take on that and not tell them that.
You said what?
There's bankruptcy. Student loans aren't dischargeable, right?
Correct.
Because it's the government. You're not going to get over in the government.
Correct.
And there's bankruptcy attorneys that'll, we'll file bankruptcy. You got $150,000 in school loans? Yeah, we'll take it. Yep. They know in the back of their mind it's not dischargeable. They'll take it, though. See, it's another thing. You have to know your subject matter, right? You don't know your subject matter, somebody's going to look at you like a mark, like they do when you walk into a car dealership, and you're going to walk out of there with your pockets out, with no dollars in your pocket, completely angry because you got taken advantage of. And understanding a lot of this stuff and understanding the subject matter, which you're talking about in all capacities, eliminates somebody's ability to look at you like a mark, to look at you like somebody that can be taken advantage of, which if you go back in all these podcasts we do on all the different things, and we'll continue to do, it all gives you kind of the real, the real specifics, the real deal, the way to look at it properly without the smoke, without the nonsense, without the bullshit, just the real way to be looking at these things so that you can protect yourself and then make the best decision that's in your interest, You should know that somebody should have told that guy, that he wasn't going to be able to do that, right? But there's people that won't.
Correct.
It's a shame.
And then the government, and then student loan. School is just so expensive, Jay.
It's insane. Listen, it's insane. Sorry, I got something in my throat.
I can imagine the bill that your wife probably had once she graduated, especially if she went into some bougie Ivy League, easily $140,000 for like 4 years.
Hold on. Forget about that. Think about now, though. If you have a kid now, you got 2 kids, you just had another baby, right?
Mm-hmm.
Right now, the average school, the tuition is 50 G's a year. You times that by 4 years. That's $200,000, right? $200,000 before you get into spending money and some of that other bullshit. That's just tuition, right?
Yes.
Okay? You say to yourself, if you're a kid, this is why all these people, all these younger kids want to vote for Bernie Sanders, why they were all it was all young people, right?
Correct.
Bernie Sanders was the millennial favorite. Yep. Because he was the only one talking about socializing and getting rid of school loans, because that's all they care about. It's stuck to their legs like an anchor. And as generations go on and money continues to get drawn there, fortunately, what's going on with this COVID thing is it's backed off some of the lending, right? Yeah. And as a result of that, the less money that goes, the less money supply that applies to any situation, the more it's a supply and demand issue. It'll bring the prices down. But it's so inflated right now that in order to get a price back to like any kind of semblance of reasonable pricing, it's going to take forever, and we're not ever going to get back down there because we'd have to get in such a deflationary environment outside of the fact that it exceeded the inflationary pressure like 200-fold every year for the last decade. It's just not ever going to get back to a place of reality. So then you say to yourself, without going down this whole wormhole, but you say to yourself, does it make sense for every kid to go to college? No, it doesn't. I know when I went to college, most of the people weren't paying attention, right? including myself. So I mean, you don't have to figure out what you want to do most of the time till after college.
That is so true. That's so true.
So you're going to college and you're dicking around for 4 years. If you're fortunate, only 4 years. Most of the time now, kids hang out longer. But it's like they don't realize till after they shouldn't even have done it in the first place. It's a societal norm that gets thrust on people, and it's not a one size fits all. And I think nowadays that with the amount that it's costing for kids to go, I think people are really, really evaluating if it even makes sense to do that.
Well, didn't Donald Trump sign something that says your skills will matter? You don't have to have a degree or something like that. He signed something that was like that.
Maybe, but it's not gonna change. It's not gonna change in a COVID market with employment contracting, right? And it's not gonna change with everything that's going on, with everything else. I mean, imagine being the kid that went to, for instance, I'm down here in Florida, right? And the state school is Florida State. It's like $50,000 a year, right?
Yes.
So you just got done your 4 years. Say you're on honor roll or whatever it's called. You finished top of your class. So you got 200 G's around your ankle. Now you're walking around with, and you find out that COVID just hit our economy. You can't get a job, and you got to start paying. So you're going to use your deferment, but all you're thinking about is the fact that when that payment comes due or whatever happens, you're going to be factoring that in, because millennials are responsible, right? They're responsible people. The generation before, which I think was my generation or our generation, they just levered up to their head, right? That's just what people did. They just levered, and they said, there's no room for you school loans, so I'm not dealing with you. But the millennials are looking at it differently. So they're coming out of it, and they're looking at it from a perspective, I got to figure out how to pay this. To the point now where, I don't know if you know this, but the one program that they offer now with school loans is where they can literally take a piece of every one of your paychecks. Did you know this?
No. What you said?
Yeah. So what they're doing now, and this is chosen by people, it's so it's just terrible advice, but what they're doing now is they're saying to a student, listen, I know you're concerned about your student loan debt. Rather than a fixed monthly payment, if you're employed, we'll take a small piece of your every one of your paychecks. Might be $60, might be $70, might be $100. I don't know what the breakdown is, but they take, and rather than making them make a monthly payment, they take a piece of every one of their checks. So it's almost like a cash advance, right?
Oh.
Every check you get from your employer, they take it out, like you would take out your health insurance or your 401k. Instead, you're going to pay off your school loans. And it's a situation where it's like, man, listen, you're in the wrong generation, guy. I mean, the whole generation before you figured out a way to not pay and then get into an income sensitive program to the point where you can pay $10 a month for the next 10 years and potentially get a discharge. You're not looking at, you are looking at it the fiscally responsible way, but you're not looking at it at the way that's been set up, right? So you're getting a whole different generation here that's trying to rationalize these loans and figure out a way to actually function on them, where it's a contrast to the generation before, right? Which all they're trying to do is get out from underneath them and kind of walk away from, which I find really ironic. Just the difference in the perspectives.
That's crazy. Well, I got a question like that right now. Anna Colon says, what's up? So I say, hey, what's up? And she says, so would it make more sense instead of removing them? John, listen here. So will it make more sense instead of removing them to do a loan forgiveness? I get calls for them all the time. Are they fake?
To forgive the student loan?
Yes.
Yeah, they're not gonna. No. I mean, listen, that's a sales pitch, by the way.
But what's the reason why someone would want to get their student loans removed from the credit report?
Someone would want to get their student. Well, we know this. We hear this all the time. They want to, because it's so large and it affects their debt to income, and there's no mortgage programs anymore. That even if you're in deferment, they'll calculate the principal and interest payment, which works against your debt to income. So people will do it for that reason. Obviously, another very large.
So you're talking about buying power.
For sure, yeah. Your debt to income ratio. I mean, it's effectively the only ratio that matters in the amount that you can get approved for, right?
And even if it's in deferment.
Yeah, if it's in deferment, they still calculate the amount, because it's effectively going to come out of deferment. Every public loan only has like 2.5 years of deferment baked into it.
Yes.
It's not endless deferment. Then you can utilize a little bit of forbearance, but that's it. Then you got to address it. So a mortgage is a 30-year mortgage sometimes, right?
Yes.
So they used to back in like 2012, 2013, if you were in deferment, they didn't count into it. And then they realized what happened is so many of the loans went bad because it came time to start paying the school loans, right?
Yes.
And it conflicted directly with that. So then they started calculating, even if you're in deferment or forbearance, they started calculating the payment of that particular school loan at the worst case, which is the principal interest payment, and they backed out of your debt to income ratio, which effectively impacts your buying power, directly impacts your buying power. So people try to get us to remove them for that reason. Obviously, just like I was saying, there's a other very large component of people that have gone late on them.
Yes.
You know, and they're either in default on or gone in default on them, or something has come up that has impacted their ability to pay them, which is understandable. It's not unique to any one person. Correct. I think the default rate on school loans is like, as of January or February, was like 25% before this whole hit. So it's very common, but it's modern day. It's one of the most common accounts we see that needs to be removed is school loans. I mean, it's almost on every file we see.
Armando Lamboy says, I also got old collection account from 2015 from a utility. I moved to Florida. Fast forward 5 years later, I got a letter from collections saying I owe them money. Never got a call, letter, email, etc. And he says, what else he says? What steps should I take? Because I'm not sure if it's the original creditor or a third party that bought it for pennies on a dollar. Which dispute letter should I send to resolve this matter?
Dispute letter, and what in our.
Which dispute letter should I send to resolve this matter?
I understand, but based upon what though? You know what I mean? Like what dispute letter based upon? Like our system, the credit, like the one.
Yeah, based upon our system. Armando Leboy, did you purchase our $99 do-it-yourself?
Because there's obviously many different systems out there, and a lot of different people pushing different products. So I wouldn't know what you're looking at in order to reference what way to point you. But if you just got a collection notice, I would re-listen to the beginning of this. I don't know if you listened to this in the beginning. I would re-listen to the beginning of this and start it over. And we go into a lot of depth about if you did just get a collection notice, that what you need to do and how you can get out in front of it and prevent it from continuing to impact you and potentially get out from underneath it.
Okay. And then, no, not yet, he said.
Okay, so then I don't know how we would answer the question, which dispute letter should be sent to them, but it would be difficult for me to answer that because I wouldn't have a point of comparison, but because there's not just general ones, and if you are looking at general ones, you shouldn't be using them because there's no general scenario to this. But that said, I would say if it is a new collection and you didn't get on the call in the first 45 minutes, I would start it over when we get done and re-listen to that, and it'll give you a much better idea. If it's something that's already reported and it's already on the file, it's been on the file, then you're gonna have to go a more traditional disputing process route where I would advise getting either us doing it or
Armando, if you want to quote, just email me, and we can also send you link and information on our $99 do-it-yourself credit repair system. So Curtis Davis says middle class income people at $40,000 a year can afford a $20,000 car. Why will government let young people borrow $100,000 for college? I know.
Yeah. Well, listen, it's a very valid question. I mean, it's a question that. It's a question that stands the test of time. It makes absolutely no sense. They flood the market, the school loan market, with money, and then they make them back it off when they realize that the individual doesn't make that much. It's the most counterproductive process you've ever seen. Overlend on the front end, right? Yes. And then if the guy goes to Harvard and he's got $265,000 in student loan debt and he's a journalist that makes $36,000 a year, we'll then accept $3 a month for the payment for 10 years, right? And then discharge the loan. Mm-hmm. Why even do it in the first place? Why flood the market so aggressively with no documentation, just endless amounts of loans in so many different areas? I understand schooling is an enormous, enormous part of society and advancement and everything. I fully encourage education. Obviously, I speak on these kinds of contexts all the time about how important education is. I don't think it's important to flood a market the way they flooded it, because whenever you over flood a market with liquidity, it entitles them to raise prices the way they have. They'd be morons not to raise prices, right?
Yep.
If you sold sneakers and all you sold was a green pair of Nikes, and those green pair of Nikes, people kept paying you more and more money for them because there was money available to borrow to buy them, you'd keep raising, because why wouldn't you?
Correct.
Because the demand is there, right? So you're going to keep it, and that's all they keep doing. The money supply is there from the government. They're going to keep raising it. They have outpaced, every school in America has outpaced inflation. Take a look at it.
Oof,
Has outpaced inflation by 100 times over.
Yes.
I mean, they have increased the cost of any commodity over that period, any piece of real estate, any equity, etc., times 1,000, times 1,000. I mean, when I graduated, when I went to college, I went to Temple University, and when I went to Temple, I think the annual. Now I was in the city, and it's in the city, right? But in state, I think the tuition annually was, what was it, $5,000? It was like $5,000 a semester, $10,000 maybe on the year, something like that.
Yes,
right?
yes.
Now it's like $45,000. My senior year was 2004. So it's 16 years. You're talking about 16 years. It went up 35,000. It went up 300%.
Wow.
In 16 years. Do the math on that. That's insane. Nothing has gone up that much. I mean, it'd be great if you could buy stock in these schools, right?
Oh, tell me
Forget
about it.
But they're all nonprofits, which is crazy, because you have Harvard, who's a nonprofit, but they have like the 5th biggest endowment fund in the entire world.
Correct.
They're a nonprofit organization.
Did they take COVID relief funds too? I heard they had to give it back.
Well, they applied for it. I don't know if they kept it. I'm not sure. They definitely applied for it. But think about that. A nonprofit operation, nonprofit, that gets so much money that they start an endowment fund, which is effectively an investment fund.
Oof.
Okay? And it is now like the 4th or 5th biggest fund in the world.
Wow.
I mean, think about that. It's insane, right? It's insane that you're flooding one area with so much money, and you continue to flood it with so much money that is bad money. Not bad where it came from, but a 25% default rate, and that's not even calculating in the losses they take on people that end up doing income sensitive and income based for $6, $7, $8, $9 a month, right?
Yes.
Why do it that? Why not fix the problem? Because you're causing a bubble in the schools, right? You're attaching a lead anchor to the kids' legs.
Yes.
And you're hurting your own balance sheet. There's no logic. I don't even understand the people that look. I understand lending in general, because I just understand all the intricacies of it, right? And where the money is made, and even on the mitigation side. I don't know anybody that would want to invest in school loan money. I don't even understand it. I don't understand it. You have no recourse, right?
Mm-hmm.
Like, you have recourse if you're the United States government, but if you were going to go in and be an investor of like a private loan, your recourse is capped, right? It's capped to the extent of a regular unsecured debt, except you get subpar interest rate, you get spread out over who knows how long, right? And it's just like collecting a short-term unsecured debt. So why not just buy a short-term unsecured debt for less dollars on the penny or less dollars on the cents, and ultimately end up getting your money quicker? It just doesn't make any sense. None of it makes any fucking sense. If you really understand how it works, none of it makes any sense. And it defies logic, and it you're seeing it, and it'll eventually reach a hill, because eventually we'll get to a point where, probably at that point now, it's only going to get, hopefully, some deflationary pressure once this whole COVID situation, once all the band-aids come off and all the stuff that the government's putting on comes on, we can actually start functioning like a free market again. Once that happens and we start getting some deflationary pressure, hopefully that'll help bring down some of the prices, but I don't think it's ever going to get us to reality. So we'll see. We'll see. I mean, but it doesn't make sense then. It didn't make sense then when it was growing. It doesn't make any sense now that you can expect a 22-year-old kid who just graduated college to pay back $250,000 in student loan debt. He doesn't know what he's going to do.
Oof.
He's a professional partier, right? And this guy owes $250,000 unsecured to his life right now.
Oof.
He's got no idea what he's doing with his life. It's crazy, man.
Okay, so OJ said again, I sent a validation letter to the collection agency, LVNV, and they just sent me a letter that just says this is attempt to collect the debt with just a balance. They ignore my letter. What's next?
Well, I mean, I don't know when the letter was sent. Who knows if it was disputed before? Again, I mean, there's a very specific protocol. This we talked about this. We started the conversation and the whole podcast on with how it needs to be done.
Correct.
Right? If you get beyond the period where they've already reported on your credit, you're wasting your fucking time sending that validation in.
Yep.
If you send the validation in after that, then you're wasting your time. It's not going to work. You need to go to a professional and let the professional do what the professional knows how to do. If you catch it early on, when you first get the letter and the notice servicing, that's when that validation is going to hold true. And that's when that validation is going to actually be able to be functional for you and provide you the opportunity to be able to get that off, and you're getting out in front effectively of the debt. If you do it any later than that, you're wasting your time and you're going to get what you got. Chances are, based upon the response you've given since we started, though, it sounds like you've disputed it and you sent a validation. So if you somehow disputed it before that validation, chances are you just confused the situation even further, because they probably already felt as though they validated it because they have to send you a response with the initial dispute that you send or any dispute that you send. So they probably felt like the response related to the validation was probably frivolous, which is probably why you got such a generic one if you did dispute it before. But again, all things why I say that doing a validation is effective in a certain context, right? In very specific contexts is like the one we started with on this topic, because that's the most efficient point when that validation is going to be effective. Anything outside of that, it loses its effectiveness exponentially.
Correct. If you need more info, OJ, just my email right here. So just send me email. Curtis Davis. Most people should not take college loans unless understand credit the whole picture. Okay. Glenn Byers says when you said $200,000, that's a mortgage.
It is a mortgage, and that's a sad reality of it. And that's why you're getting situations now where lenders are like, "Well, look, we'll do you a favor. We'll let you start paying each paycheck. You can pay us a little bit, acting, letting the kids think that that's in their best interest, when in reality it's the lenders getting their talons in their sides right early enough to the point where you get them bogged down, and you get an accountable, young, impressionable teenager.
Correct.
And it becomes that kind of a situation. So.
Well, Curtis says, Gizzy, Trump, nor the government can change economics. There's not enough jobs unless you are connected. Then maybe still options. This is for when you get out of college and you want to go and get a job. Okay, so now we have Freddie, and Freddie says, John, as you know, me and my moms are trying to buy a house like yesterday, laugh out loud. The loan negative account she has is about 18 months old, which originally kept us from getting a mortgage in the first place. Lender stated we can wait till charge-off hits 24 months or more, then reapply. Hopefully, this will be gone before that day anyways.
I mean, considering we're, I think, in the second or third round, I would think 24 months, which is like, based upon the math you provided, is like another 7 months. I would certainly hope so.
Correct, Freddie. Okay, so yes, then Freddie, Armando, take the beginning of the video. Okay, he'll take a look at the beginning of the video, and then we got Carissa that says because they know majority will fall for the trap of school debt, and majority won't be able to repay, and they know this. They take advantage of you as soon as you hit 18 years old. The government stays rich off of our financial ignorance.
Absolutely, but hold on, just to be clear, that she said it in such a way, financial ignorance. That's an appropriate way of saying it. This is kind of what we've been kind of trying to imply with a lot of these educational videos, to try and eliminate that factor, right? Because I completely agree. I think all lenders look at a large majority of the herd in our country, right? Which is like the people that, like, it represents probably 80-85% of the people, and they're viewed as all thinking together, right? Like thinking the same way, behaving the same way. They follow each other's advice. They all get looked at like a herd. That's why it's called the herd mentality, right?
Correct.
Easily manipulatable, like a herd of cattle, right? It's just effectively where the term comes from. So we like to do these so that you're not part of the herd. You can be somebody that doesn't have to be. You can understand what's going on, and you can understand the situation, and you can understand why. You can understand why all this stuff happens in the capacity and the way that it happens, and how you can navigate around it without falling, without falling victim to a lot of these games, collection company games, over leveraging yourself games. I mean, it's all a game, and if you understand how to kind of bob and weave with it, and how certain ways, like how positioning yourself now with leverage can impact your ability to borrow relative to your income in the future. We had a whole mortgage, podcast. We've talked about,
Correct.
like I said earlier in the podcast, we've talked about how you can protect yourself if you get served, if you show up to court, things like this that will change the leverage in the conversation, and it'll shift it back in your favor and allow you to position yourself properly. Same with the school loan stuff. If if you're somebody that has school loans, then we've done podcasts on school loans and how you can position yourself as far as not getting garnished, get into one of the programs and different programs that are most advantageous for you, so that you don't have to get into default and potentially get your wages garnished, which we've had to help clients with, or get your tax return money taken, or any of that stuff. So we definitely hope, even if, like I said before, many times in the other podcasts, we can help a couple people get out from underneath and understand this stuff in certain areas, so that they're not looked at that way, and they're looked at in a position of leverage, then I think that would be a victory, But we try to get these out to as many people as we can, so that you can get some real advice. I know there's people that only like hearing like the just the nonsense, right? It just sounds, I guess, in an Instagram world and in a Facebook world, the nonsense just sounds so much more attractive. But the reality is, the truth is never attractive. And the way we describe it, it may not sound attractive, but it's true. And it's the way it is. And if you follow our advice and the stuff we give you here, I promise you it'll put you in a better position.
Correct. Okay, and Gizzy and John has changed my intelligence on credit over the last 5 years, from 640 to 735 FICO score, through motivation and accurate information. Thanks. That's what Curtis Davis says. Thank you, Curtis.
Definitely.
Very nice of you to say. Let me just pop that in there so that people could see. And John, we're coming up on 2 hours, 7 minutes. No more questions as I see. Mondays are always busy for us. Anything else you would like to say, John?
No, just like we always say, if you have anybody you think that this can help, the knowledge that we have, or any of our podcasts that we try to do each week to try and educate people, it really comes from a solid place. Like you said, we're not here pushing our product to people.
Correct.
We're not here trying to sell you on what we do, that you can go back and see the videos for the last 10 years. You can go back to the client testimonials, go back to all that stuff. This isn't a push for us to try to, this is strictly an opportunity for people to understand things that obviously are not totally understood in society. And like I said before, if it's a situation where it resonates with just a handful of people and they can follow the advice and actually see it, it'll take you a long way. But if you listen to all the advice, I'm telling you, it'll change. It'll take you from a game of checkers to a game of chess in a short period of time, if you really take notes and you understand, you ask the right questions. So, if you got anybody that these videos and these podcasts can help, please forward it over, because we want to get as much real education out to people as we can. I mean, there's no caveat here. You don't have to be a client of ours. You don't have to be somebody that's even interested in starting with us. There's no requirement here to listen to the advice and the education we're providing. There's no catch, right? We're not selling your information. We're not expecting to monetize off of you. We're just trying to give you the right information, because there's so much bad information out there. So, you got
there's bogus, crazy information. And then the next thing you know, you'll be like that guy who's monitoring his credit with 4 different places. Hoping for a different result. Yeah. Hoping for a different result every 30 days. Imagine looking at, it's like Lord of the Rings, when you got the guy, you're calling your credit my precious. Don't leave.
Yeah, but I mean, listen, it's something I feel bad about, though, right?
I
Like,
do feel
the guy
bad for
wants,
you. I
the guy
do.
wants it so bad. You know what I mean? He wants it so bad that he's just hugging it so hard that it's just, and it's not. He's just not been in the right. He's not even on the right path, right? So he's just going to continue. He's knocking on the wrong doors. His energy is drawing him to the wrong people. He keeps going back to the same person that's not getting him what he needs.
Correct.
And unfortunately, he'll probably continue to drive himself nuts until he aligns himself with the right people. But whatever the case, I wish that guy the best.
I wish him the best too, but I told him it could be a 2-year thing. Hopefully, he goes somewhere else.
I think you probably, when you said more than 2 week thing, I think you probably scared him away. So I mean, but I think that was the intention. So I think it's good.
Alrighty, Jay. Hey, listen. Almost, yeah, not almost. Like, we have been blessed, even with like COVID. A lot of you have started credit repair. Thank God that we position ourselves with doing these videos. I've made videos. You see me on social media every day. I'm not going anywhere. People start credit repair with us every day. So we're very thankful for that. And on that note, just want to say thank you to John for the continued support of this channel. GizzyCredit. I'm nothing without the brains of John right here, because he's the one that really is the brains of it all. I just like to do the social media and communicate with you guys this way, because I know you guys are hungry for knowledge. And the more we do these podcasts, the better it is for you to understand us, where we coming from, so that when you do choose to start with us, it's going to be a thing where you guys, it's going to be just like this. It's back and forth, understanding, you asking questions. We tell you what's the best thing for you and your life, and to help you achieve the goals that you want to achieve with your credit. All right.
Yeah.
All right, Jay. Thank you so much, bro. See you later. All right. Bye-bye. Pues sí, mi gente. 2 hours, 11 minutes. Yo, didn't that fly? Like, that just came like this. Jesus. I just want to say thank you to everyone. Thank you to John as well. And, a lot of you, who start the process, you call me. Listen, it's not that we don't want you as customer. It's that we know what it takes to help you with your credit. So when you're a customer who has gone from company to company to company, you see one of our fast credit repair results video, which I am going to come out with this video coming up. All right, tomorrow is credit repair results videos. If you are 80s baby, you know that this is Cobra. All right, Sylvester Stallone Cobra. And he says, and I say, bad credit is a disease, meet the cure. Let me show you this thumbnail, which is a hilarious thumbnail. But I just want to say thank you for letting me be creative and messing with YouTube and creating content like this. But definitely appreciate you guys logging on today. Again, this is my email below, ending up with GizzyCredit theme song. Not so much the whole song, because some people have demonetized my stuff. Anyways, thank you so much, and I'll see you guys. What you need is just a change.